Hello, everyone. Welcome back to the show. It's an absolute pleasure to have you all once again. Today's guest is Mitch Abel. He's the founder and CEO of Investment Current. After retiring at 62, Mitch found himself facing a reality that many people quietly fear. He wasn't confident he had enough saved to retire comfortably. Rather than accepting that uncertainty, he immersed himself into the world of investing. The journey wasn't smooth. He experienced devastating losses, including losing $150,000 while learning to trade options. But instead of walking away, he went back to first principles, rebuilt his strategy, and eventually recovered every dollar. Wow. Today, Mitch teaches others that successful investing isn't just about reading charts or finding the next winning trade. It's about mastering patience, discipline, emotional control, and learning how to think under uncertainty. Mitch, welcome to Thought Atlas. It's an absolute pleasure to have you on the show.
Well, thank you so much. That's a wonderful introduction.
Of course, Mitch. So, Mitch, before we continue, can you tell us a little bit more about yourself?
Sure, sure. So I worked for 40 years in corporate America in the telecommunications market. I was a sales guy. I got to travel all over the US, made a lot of money, but I spent as much money as I made, and I didn't do a very good job of saving. Um, So when I retired and looked over my shoulder at the portfolio that I had amassed over 40 years, I thought to myself, oh my goodness, I'm gonna outlive my money. So I attended all kinds of mastermind groups and came across this guy that said, hey, I don't want your money. What I want is to teach you how to do value investing. So I went to his classes, took courses, did all kinds of things with him, and I was a coach for him for 5 years. So he taught us some very simple um, option strategies. Started looking around again, and I found this other group that was trading options on the open market. And instead of selling to open, we were actually buying and closing with sometimes within seconds, sometimes within minutes, sometimes within hours. You mentioned in your opening, I lost $150,000 in 6 months. So
Wow.
I paid for education from him, and I went back and I went and reviewed that education and reviewed it and reviewed it and practiced every single day. But what I was missing was taking profits when it hit certain milestones, instead of waiting for it to hit my target, my overall target. And then, 5 years into this, I had some people contact me and ask me if I could teach them what I was doing. And I said, sure. And we set up a Zoom room and I started teaching them what I was doing. And one student turned into three, that turned into five, that turned into 10, that turned into
Wow.
100. And 5 years later, now it's 5 years later, almost 6 years later, and um, we've had over 250 students come through our program. Out of
Wow.
the 250 students, we've had about a 30 to 35% success rate with our students, teaching them how to build their portfolios and eventually how to build generational wealth for themselves and their families. What I found was there were really four components that influences the success or not of students that I've taught. The first one is really education, understanding the language of the market, understanding technical chart analysis, understanding candlestick candlesticks and the war that's going on for every single candlestick between buyers and sellers, what we refer to as bulls and bears. Bulls being buyers, bears being sellers. When we make money based on certain rules, and the market is going up or down. We don't make money when the market is just in consolidation and going sideways for a while. Price action is a very important concept for people to understand because everything happens on price action. Whether the market's going up or down, you have to understand what those candles are telling you and whether or not the market is volatile and what the overall trend of the day is. But key to all of this is education. This is not a game of getting rich quick.
Exactly.
This is a game of being very patient and waiting for trades to come to us as opposed to us trying to find trades out of nothing. And so part of patience is understanding that winning and losing is both of them are part of this game. And reading the language of the market, the chart patterns, the price action, and the indicators help us understand where we need to slow down and where we need to speed up and react to what the market is providing us. And so in my live trading room, which is open from 9 o'clock in the morning till 4 o'clock in the evening, Eastern time, 5 days a week, we spend a lot of time talking about patience, talking with my group about and the community about when the right time is to actually enter, exit exit a trade. I can tell you that it took me a long time to develop the patience to build a successful portfolio. The other component is discipline, right? That's the third component: education, patience, discipline. Discipline really it takes on applying rules to the trade. For example, we have a rule in my educational piece that we will risk no more than 10% of our total portfolio value. So, for example, if you have a total portfolio of $2,000, you're not going to risk any more than $200 in any one particular trade. If you have a portfolio of 5,000, you're not going to risk any more than 500 in one particular trade. You also have to have the discipline of creating and following a set of personal trading rules in a very clearly defined plan. A trade plan not only talks about the rules of the trade, but also what the psychological and emotional effects of that trade might look like, and build disciplines around each one of those emotional consequences that you might feel in order to gain discipline over those emotions. One also means committing to a daily practice because mastery takes 6 months to a year of consistent effort to be successful trading. You know, in my room, if people don't have, if they're beginners and they don't have experience trading options, we ask them to trade options in what we call paper money, simulated trades, so that they can begin to learn what trading is all about and learn how to read the charts long before they risk even a dollar of their own money trading. Think about it, the long-term benefit of trading in paper money is not that you were successful in every single trade, which in paper money, almost every trade is successful. It's about learning how to read the market and build the confidence so that you can eventually transition to real money and be successful. And what trading will do is it will bring every single emotion out of you because of wins or losses. That exuberance that you feel when you win and the low, managing those twin forces of fear and greed that derail most traders is incredibly important to being successful trading. Being able to detach yourself from those feelings and control those emotions is a very difficult action for people to take. Emotional control also means working with specialized trading psychologists sometimes.
Yes.
We have an affiliate by the name of Randy Howe. Um, Randy is a licensed psychologist that only works with traders that have experience trading. And he's done so for the last 20, 25 years or so. He has a set program that takes about 10 to 12 weeks, I think, because it's structured, it's a structural emotional mastery program for traders based on controlling emotions and understanding what emotions are caused by. Understanding the technical side of trading is learnable, but self-mastery is the true competitive edge.
You understand. Now, I just want to point out a few statements you made that really, really resonated with me. The first one was you said it takes about 6 months to a year to actually master, how to read the charts. That's not the difficult aspect. That's actually very easy. All you have to do is just follow the blueprint that has been laid out in front of you, and it's that easy, honestly. Difficult aspect is the psychological and emotional one. That's where most of the work, if not 80% of the work is, honestly, because will you be able to continue executing using that same blueprint when you eventually hit a losing streak? Because a losing streak is something that every financial trader, financial analyst, or what have you is going to eventually experience. Will you be able to continue using that same blueprint, that same edge that you've been taught, that you learned in 6 months to a year? Will you be able to continue executing with that edge? And that's where most of the work is. I love the fact that you emphasize so much on the psychological and emotional aspects of, trading itself. And the fact that you even said there's a psychologist or a therapist, if I think that was what you said, that your company works with to help your students, get their emotions and their psychology in check and make it optimal for their trading. And I think that is absolutely wonderful. You rebuilt after losing $150,000. I know lots of people that would literally just give up and not even attempt doing this again, but
Yeah,
you're not one of them.
yeah.
Now, what mindset allowed you to see that setback as part of the process rather than the ending of the journey?
I realized that I had to change my relationship with money, that I had to have a different mindset, that I had all the support I would ever need.
Now, Mitch, with the advent of AI, algorithmic trading, and constant financial news, people have more information than ever before. Do you think we're going to become better investors going into the future, or we are simply just going to get more distracted?
You ask about AI. I don't believe AI is mature enough to do what we're doing. it won't, it can't duplicate what we're seeing with our own eyes and um, information that we know. I've had a lot of people ask me about, let's automate your process. Let's automate it. The problem is that you can't automate this process right now because AI isn't smart enough to do it. Um, the way that we use AI is we have something called a stack list. If you go to my website at investmentcurrent.com, um, you'd be able to click on what we call a resource hub. And that resource hub has lots of different educational materials on it about trading. What this does is it brings in and categorizes all of the different materials that we have produced over the years and created over the years.
Mitch, finally, after everything you've experienced, from retirement to uncertainty to financial independence, what do you think money can provide and what do you believe it can never provide?
Money provides peace of mind. It allows you to pay off all your debt if you have any to begin with. Um, and so, money is nothing more than a tool to use and to help with. What it can't provide is emotional control, discipline, and patience. It cannot do that for you. It can provide education because you have to pay for the education, right? There's no getting around. You have to pay for education. But it can't provide you those three pillars of discipline, emotional control, and patience. You have to do that on your own. And no amount of money is going to allow you to do that. You have to work on that yourself and become very aware of where what where you have to work on that. We have we have four different um, types of people, demographics, four different demographics of people that join us. We have people that are coming out of high school or college that have decided that they do not want to go and get a job, right? They want to
Yes.
be more entrepreneurial and learn how to make money as an entrepreneur. The next demographic are those that are 25 to 40 years old. And these people have work experience. They've been working in corporate America a while. They have gotten, they've gotten really, they've gotten really um, upset, and they're looking for a way to replace their incomes that they're making at their job so that they can leave corporate America. Then we have the 45 to 60-year-old demographic that basically says, oh my goodness, I'm going to be coming up on retirement soon. I'm looking at the portfolio. I don't think there's going to be enough money there for a really good retirement. And then we have the last demographic, which are people that are actually retired, that have been sitting on the couch for a month or months or years, that now want to do something different and have fun while they're doing it. Maybe add, $1,000 or $2,000 a day of earnings. One of the unique things about my trading room is that we are live and open. Most trading rooms in this business only have a chat box, and the host only allows them to chat with the hosts themselves. While everybody can see the chat, the host controls the chat and what questions he or she are going to respond to. The way that you get in touch with me is Mitch at investmentcurrent.com or by going to our website at www.investmentcurrent.com and or join me on LinkedIn, Facebook, YouTube, what have you, and reach out if you'd like to talk. If you have a guest that would like to talk with me directly, they can find my Calendarly, I don't even know how to pronounce it, um, link on LinkedIn, for example, or on the website, and they'd be able to schedule a separate one-on-one appointment with me.
Absolutely, absolutely. Thank you so much for that. Well, listeners, if you know you enjoyed this conversation, please follow, like, subscribe, the usual. And of course, share this with a friend or two so that they can learn a thing or two. It's been an absolute pleasure hosting Mitch on the podcast. Mitch, thank you once again for coming on the show and sharing your insights, your journey, of course, your story with us. Now, to the listeners, please, if you want to reach out to Mitch, his details are in the show notes of this recording. Do not hesitate to reach out to him. And once again, everyone, thank you all for coming. Have a wonderful day. Take care of yourself and stay tuned until the next episode. This has been Thought Atlas.